interesting. Whilst we are talking on the S&P and the moves that we're seeing in markets, we're going to bring up another chart, and it's around why central banks are still relevant, I guess, around the Federal Reserve and their balance sheet and what, you know, where the S&P is sitting at the moment. And certainly does look like at the moment there is a bit of a divergence there.
Yeah, this is as geek as it sounds. My favourite chart, and
Okay.
I've had it in my pack for 2 or 3 years now. And you know, correlation doesn't prove causation, but it's a pretty good chart anyway. It's the black line shows the Fed's balance sheet, and that has increased during the QE phases, QE 1, 2, and 3. You know, it has been stable as those maturities have been rolling off and they have been reinvesting back in the bond market, but it also tracks the S&P 500, which shows that when the Fed is outspending in terms of QE, although it's not at the moment buying into the equity market like the Bank of Japan is, there is a pretty strong correlation. And again, you know, if you think that's going to come back towards that the central bank's line on that chart, you know, it's a good argument there to say, look, maybe the S&P 500 and equities more broadly are overvalued at current valuations, and we are due a bit of a correction in that situation. And an important point is to note as well, although the Fed has stopped its QE and is just continuing to reinvest, other central banks like the Bank of Japan, the ECB, and potentially later this week on Thursday, Bank of England, will have additional QE programs as well. So the overall global central bank stimulus is continuing to increase in terms of absolute levels as well. So it's, you know, you can potentially argue, if you want to be a bull on equities, that they're still seeing the stimulus coming into the market, and that money is still finding its way into financial markets. But you know, I think on that level, again, you know, it's another factor that I use to highlight to investors. Maybe things on the equity side are looking a bit overvalued. Maybe they should be looking to a more defensive and more even split between fixed income and equities.
All right, fantastic. Thanks so much for taking us through those charts. Always so interesting there. We're just going to move back to